Hey friends, welcome on board. This is Jay Author and I'm making this presentation on behalf of retirementtransformation.com, and today I'm going to talk about tax saving strategy number 2, which is maximize your RRSP contribution. If you live in any other country other than Canada, you may not be familiar with RRSP, but some of this principle may apply and it might be called something else in your own country. So you should watch this video to see how you can save the tax for your retirement and use this knowledge for your retirement planning purpose. There's a standard disclaimer. Pause the video and read it if you want to. Now, in the very first video on tax saving strategies, I've talked about the top 10 strategies, and these are the top 10 strategies over here. And in this video I'm talking about the second strategy, which is maximize your RRSP contribution if you live in Canada. So let's talk about what is RRSP. Well, there could be all kind of technical definitions, but I'm not the technical guy. So what I want to tell you first of all is that don't underestimate the power of RRSP. Now, if I have to explain the RRSP to my son, the way I would explain is this. Imagine if you could invest thousands of dollars in a portfolio every year and deduct all of those dollars from your taxes. Imagine how much you will benefit from this. And on top of that, you can grow all those dollars tax deferred for years to come through your retirement nest egg. Let's talk about it more. So for my fellow Canadians, here's more information about the RRSP. For those guys who always look for the history, well, RRSP were introduced in 1957 with the focus to save for the retirement. So, RRSP not only gives you an immediate tax deduction each year equal to the RRSP investment contribution you make, they shelter tax on all the interest and capital gains you might be accruing inside the plan from your investment, or for your investment, I should say here. Well, and there would be no tax on your retirement nest egg and all the growth inside it until you receive it much later in your life when your tax rates and financial needs may be much lower. So if today your tax rate is pretty high, during retirement it might be lower. And so you might be taxed lower in the lower bracket. And that's the reason why the amount of tax you save depends on your marginal tax rate. So here is a graph which I've taken from investopedia.com that shows the power of the RRSP contribution if you start it early. So this is more based on timing. So let's say if you have $1,000 which you invested early enough, that's the blue line here, which is the early investor. So over the period of 45 years, you will have $29,556 if you invested $1,000. Over 45 years, that would be the value of that $1,000. Now that assumes 8% annual return. Keeping everything same, now you're just starting at 10 years later. That's the green line, late investor. And if you started 10 years late, then you will have $13,690. I'm sure you can see the difference over here. I don't have to talk about more than that because the delta between 29,556 and 13,690 explains that RRSP should be started as early as possible. Now, some people say, why I have to invest in RRSP? Why can't I do outside, which is your normal? You could have your own investment account or any of those non-registered accounts. Well, you have a point, but I want to show you why you should not ignore RRSP here. So you can see there are two colors here, and it's pretty evident here, the taxable and the tax deferred. Now, tax deferred is the basically RRSP, and taxable is your normal non-registered account. So you can see it's not clearly evident in 10 years time frame, but as you start multiplying and this go to 20 years and 30 years, you could see the delta gaining much more difference. So you can see if you were investing in the tax deferred, which is RRSP, versus taxable, which is your normal account, how much more money you can make with this simple strategy alone. So for those geeks who really want to know how can they calculate that formula, that what would be the benefit if they do it in RRSP versus in their own normal investment account. So you can see here the formula is here. I'm not going to talk about it. You can pause the video, read it, understand it, and then you can do your own calculations if you want to. So I'm giving you a choice here. Now, what are the key benefits of RRSP? There are basically just 4 key benefits. You can talk about any other benefits, but at the end, these are the 4 main key benefits which are really important. Number 1 is all the contributions you're making to RRSP are tax deductible. Number 2, this is in the real sense, a tax sheltered investment plan for you. Number 3, you can defer your taxes until your retirement, because at the time of retirement or after that, you might be taxed in the lower brackets, so you're going to gain with this mechanism. And last but not the least, you can use a spousal RRSP plan to split your own income, because you might be taxed in the higher bracket, and by doing this, you gain the benefit by utilizing a spousal RRSP. So during retirement time, whosoever is in the lower bracket is going to gain the benefit of utilizing this strategy. So if you like this simple RRSP strategy message and you really enjoyed this, then I would say share this information with others, your friends, your own kids, your family members, and anybody else, because good things are for sharing. So don't forget to share about this. Now, there's another important thing which you need to share, and that's that like any of these strategies, you need to have a strategy for your own retirement. And if you don't have a retirement plan, you don't have any strategy. If you don't have a retirement plan, you don't have any goals in place. You're simply dreaming for your retirement. And you know what happens when you dream versus when you plan and you execute. I encourage you that if you don't have your own retirement plan, go ahead, develop it yourself. You don't have to go to anybody to do it. But if you want to go to a retirement advisor, by all means do that, because that's much better than not having a retirement plan. But if you want to develop your own retirement plan, you can do this with the help of the Wheel of Retirement Life planning process, which is shown here on the left hand side. And all that information is available at retirementtransformation.com. Go ahead, check it out, and by all means, utilize that information to develop your own retirement plan. So remember, if you want a better retirement, plan for your retirement logically with Retirement Wheel planning process, because that could be your first step towards a better retirement plan. So if you want to know more about all of this, like retirement planning, retirement tips, retirement saving strategies, retirement financial tips, all of that. I mean, there's so much of information available over here that you can keep reading or watching the videos. You can keep doing this for weeks and weeks, and you can get all the information by simply taking action. So what's the action you have to take? Well, go to retirementtransformation.com/blog and grab this information and share with others and let others know about this information, because it's all for free. Why not utilize and take the benefit of it? With that, I want to say thank you very much for watching this video and hope to see you in the next video. Bye bye.